But there is a kind of money that comes when you sell a business that is different than, like, let's run the numbers here. Let's imagine you have a $10 million a year business. Your business, you spend $3 million, 30% on marketing, right? You spend, let's say 30% on cost of goods, or even 20%, right? So now you're at $5 million spent just on paid ads, marketing, and cost of goods. Then you got G&A, which is like your team and all that shit. So now you're spending another $2 million on that. Then you got general insurance and shipping and whatever. Let's say it's another $1 million. So let's say let's say you're at a 20% profit margin. Let's say there's $2 million left in profit. Let's just say, well, you got to buy inventory for the next year. You got to pay taxes on that profit. And then what can you pull for yourself? Maybe out of a $10 million company, maybe you could pull 500 G's.
And that's if you're doing great.
Maybe. But most likely it's more like a couple $100,000.
Right.
Meanwhile, that $10 million business, that $2 million in profit, you could probably sell for $8 million liquid cash. And so that is more than, that's like 20 to 30, I can't do the math in my head, but it's like 30 years of the profit you could pull out of that company that you could get just from selling it. And then what you can do with that bigger chunk of money is really different than what you can do with the money that you get every year from it. So there comes a point where it makes sense to sell the asset to have access to the kind of capital that allows you to do different shit.
Gotcha. And that's what you experienced with Boom.
With Boom, yeah. I sold it and I got a whole bunch of money and that was wonderful.